There are 5 income heads: salary, house property, capital gains, business and profession, and income from other sources. Let's talk about house property income. As per Income Tax Department, house property consists of any building like flat, shop, office space, factory shed, etc. and its attached land like the courtyard, compound, or parking. House property is divided into self-occupied house property, which you use for your own residence. Any interest paid towards home loan for your primary residence is considered a loss. Let out house property is the one which is given out for rent, and any rental income you receive is considered as income from house property. Deemed let out house property. Any vacant property that is neither self-occupied or let out is deemed let out, which means it is assumed to be on rent for income tax purposes and will be taxed on the notional income you would receive if it was rented. Notional rent is least of the following. To calculate income from house property, let's understand net annual value or NAV. NAV equals GAV or gross annual value minus municipal taxes. Now, how do you arrive at taxable house property income using NAV? Let's take a look. In case of self-occupied house property, GAV is nil. Municipal taxes cannot be claimed as expense. This makes NAV nil. The loss on self-occupied house property will be the interest paid on home loan. Let's consider a case for rented house property. The gross annual value is the rent you receive, less the municipal taxes paid to get NAV. You can also claim 30% of the NAV as standard deduction, less interest paid on home loan. Now, let's consider a case for deemed let-out house property. Its tax treatment is similar to that of let-out house property, except for GAV, the rent will be as per conditions discussed earlier. You can claim municipal taxes paid and the interest paid on home loan taken. Income from house property is taxed at the applicable income tax slab rates. There were substantial changes in Budget 2020. You cannot claim deductions under the new income tax regime. However, you can continue to claim the Chapter 60 deductions and losses under the old income tax regime. For instance, you can claim principal repayment on home loan and expenses related to transfer of property like stamp duty, etc. First-time home buyer can claim a deduction up to Rs 50,000 under Section 80EE on interest component of home loan if the following conditions are fulfilled. First-time home buyers can also claim a deduction up to Rs 1,50,000 under Section 80 EEA on interest of home loan taken during financial year 2019-2020 under the following conditions. Interest paid on home loan is deductible under Section 24B up to Rs 2 lakh for self-occupied house property. The entire interest amount is deductible if it is let out house property. The income deduction amount is limited to Rs 30,000 in certain cases. The interest you pay on home loan is treated as loss on house property. You can set off loss up to Rs 2 lakh against any other incomes like salary or business under the old income tax regime. You can also carry forward this loss to the next financial year and set off this loss against the future house property income earned. However, from financial year 2020-21, you cannot set off or carry forward the loss if you choose the new income tax regime. You are required to give details like name and PAN of the co-owners and tenant of the let-out house property when filing your income tax return. Taxpayers having income from house property usually file either ITR 1 or ITR 2. The due date for it is 31st July. Income from house property is a rent you receive. You can show all this information in your income tax return form. Subscribe to our YouTube channel for more such videos. We are Quico, on a mission to simplify taxes for all.